Imagine going back to 2009. Bitcoin was born, a digital coin worth almost nothing. At that time, nobody imagined it would grow into a multi-trillion-dollar market or that millions of people could become millionaires overnight. Today, in 2026, many people still wonder, is crypto worth investing in now? In this video, we will explore the history of crypto, how it started, the major figures behind it, its growth over the years, the risks, and whether investing in 2026 can still be profitable. Stay tuned because this story is both fascinating and essential for anyone thinking about crypto investment. Crypto started in 2008 when a mysterious figure called Satoshi Nakamoto published the Bitcoin white paper. His goal was simple yet revolutionary: to create a decentralized currency that didn't rely on banks. The 2008 financial crisis had shaken global trust in banks and traditional finance, and Bitcoin offered an alternative. In 2009, the first Bitcoin block called the Genesis block was mined. This block marked the birth of cryptocurrency as we know it. At that time, Bitcoin had almost no value, and very few people even understood what blockchain technology was. Explain briefly. Blockchain is a digital ledger that records transactions securely and transparently without a central authority. The very first known Bitcoin transaction was in May 2010, when 10,000 BTC were used to buy 2 pizzas. Imagine spending what is now millions of dollars for pizza. Slowly, Bitcoin gained attention among tech enthusiasts and cryptographers. By 2011, other cryptocurrencies like Litecoin were introduced, offering faster transactions. Then came Ethereum in 2015, which introduced smart contracts, a technology that allowed anyone to run decentralized applications on the blockchain without relying on a central server. This marked the beginning of crypto. As more than just digital money, it became a platform for innovation. Highlight how Ethereum opened doors for DeFi, decentralized finance, enabling loans, interest, and trading without banks. Bitcoin's price began its first big climb slowly. In 2011, it reached $1, and by 2013, it hit $1,000. Early adopters who invested even a few $100s suddenly became millionaires. For example, someone who bought $100 worth of Bitcoin in 2010 could have over $50 million today. This demonstrated the enormous potential of cryptocurrencies. The lesson here is that patience and belief in the technology could turn small investments into huge gains. Add context. During this time, crypto was still niche. Few people understood it, which is why early adopters had a massive advantage. Ethereum revolutionized the crypto space. Its smart contracts allowed automated agreements to run without any middlemen. This technology enabled the rise of decentralized finance, or DeFi, where people could lend, borrow, and earn interest directly on the blockchain. Unlike traditional banks, there was no central authority controlling the transactions, which was both innovative and empowering. Ethereum showed that blockchain could be used for more than just currency. It could power the entire financial system. Example: lending crypto on DeFi platforms could earn 5 to 10% interest monthly, something impossible in most traditional banks. Explain briefly why hype can be dangerous. People often buy when prices are at peak, not understanding underlying value. In 2021, crypto saw another surge. Not just Bitcoin, but Ethereum and other altcoins skyrocketed. NFTs, or non-fungible tokens, also became mainstream. These are unique digital collectibles verified on blockchain. Artists, gamers, and even celebrities entered the NFT space, selling digital art, music, and virtual items for millions. Ethereum became the main platform for these innovations. This period showed how blockchain could expand beyond finance into entertainment and culture. Example: digital artwork selling for millions, showing both speculative investment and creative opportunity. Now, in 2026, the crypto market is over $1 trillion. Bitcoin remains the most valuable coin, often called digital gold. Ethereum powers decentralized applications and smart contracts. New projects like Solana and Cardano aim to provide faster, cheaper, and more scalable blockchain solutions. While the market has matured, innovation is still ongoing, and opportunities exist for those willing to research and invest carefully. Include the point that blockchain adoption is increasing in real-world use: finance, supply chains, gaming, and digital identity. Despite the growth, crypto is risky. Prices can swing wildly in days or hours. Scams, hacks, and regulatory changes can wipe out investments. Governments are increasingly monitoring crypto markets, and regulations could affect how you trade or hold coins. It's essential to approach crypto with caution, never invest more than you can afford to lose, and always do proper research before buying any coin. Example: mention major crashes, Terra Luna in 2022, or sudden Bitcoin price drops of 30 to 50% in days. Some early adopters became incredibly wealthy. Vitalik Buterin, co-founder of Ethereum, became a crypto billionaire before the age of 30. Early Bitcoin miners and investors also turned small amounts into massive wealth. But the lesson is clear: knowledge, timing, and patience matter more than luck alone. Investing blindly without understanding the market is extremely dangerous. Extra. Add the idea that early involvement in technology often produces disproportionate gains. In 2026, crypto continues to evolve. Bitcoin is widely regarded as digital gold, a store of value. Ethereum and similar blockchains power decentralized applications that could replace traditional financial and business systems. New projects are exploring gaming, finance, and logistics on blockchain. Adoption is growing globally, showing that crypto is no longer just speculative, it has practical utility and potential for long-term growth. There are still reasons to consider investing in crypto in 2026. The market has high growth potential, especially in emerging markets where traditional banking is limited. Decentralized finance allows people to earn interest, trade, and invest without relying on banks. Certain projects and coins could see significant growth if adoption increases. Example: Ethereum staking earning 4 to 5% annually, higher than many bank interest rates. However, crypto is volatile and risky. Prices can crash suddenly, projects can fail, and scams are common. Never invest money you cannot afford to lose. Diversifying across major coins and carefully researching new projects is essential. Avoid hype-driven investments and remember that not all crypto projects survive long-term. If you decide to invest in 2026, a safe approach is stick to major coins like Bitcoin and Ethereum, explore a few promising altcoins, and hold long-term. Avoid short-term hype and remember that research is key. Knowledge and patience are your best tools in navigating the crypto market. Example: suggested portfolio: 50% Bitcoin, 30% Ethereum, 20% selected altcoins. Crypto has a fascinating history, incredible growth, and high risks, but also enormous potential. Whether you invest in 2026 depends on your research, risk tolerance, and strategy. What do you think? Is crypto still worth it? Comment below with your thoughts. And don't forget to subscribe for more insights into investing, technology, and future markets.